Shopify Incorporated just released its first quarter results. And they were amazing. In the first quarter, the company posted solid top and bottom line growth, and outperformed on virtually every relevant metric. The quarter featured the company's biggest ever GAAP profit, as well as a massive adjusted profit. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Growing Wealth and hit the bell icon, so you can get our videos in very first moments. Even your little help will really work for us to grow. Shares of Shopify were up more than 11% in trading Wednesday, after the e-commerce company released first quarter results, which beat analysts' estimates. Revenue more than doubled as the pandemic fueled a boom in online shopping. Indeed, Shopify revenue came in at $988.6 million for the quarter ended March 31, an increase of 110% from $470 million in the prior year quarter. Meanwhile, net income was $1.26 billion, $9.94 per share in first quarter 2021, an improvement from a net loss of $31.4 million, 27 cents per share in 1Q 2020. On an adjusted basis, Shopify earned $2.01 per share, up from 19 cents in the prior year period. Both revenue and earnings beat expectations by a wide margin. Indeed, according to Zacks Consensus Estimate, Shopify was expected to post adjusted earnings per share of 78 cents and revenue of $853.04 million. Shopify generated $320.7 million in subscription solutions revenue, with the growth primarily driven by an influx of new merchants joining the platform, and $668 million in merchant solutions revenue, mostly driven by the growth of gross merchandise volume. Gross merchandise volume was $37.3 billion in the first quarter, up 114% from then previous year. Shopify President Harley Finkelstein said, "Our singular focus is on making entrepreneurship easier, and making it easier for entrepreneurs to succeed." Merchant sales growth on our platform accelerated in the first quarter, as merchants leveraged our modern commerce technology, which helps them compete in any retail environment, and engage directly with their customers wherever they are. Shopify CFO Amy Shapiro says, Shopify momentum continued into 2021, as digital commerce tailwinds remain strong, and merchants took advantage of the range of capabilities offered by our platform. The company expects strong revenue growth in 2021, but at a slower pace than in 2020. Last week, Robert W. Baird analyst Colin Sebastian assigned a buy rating on the stock. He lowered his price target to $1,550 Canadian, $1,924.02 for a 29.8% upside potential. Sebastian raised his estimates for 2021 following an updated merchant survey and strong e-commerce data in the first quarter. He said he would buy Shopify on any pullbacks. Overall, the consensus on the street is that Shopify is a moderate buy based on 12 buys, 16 holds, and 1 sell. The average analyst price target of $805.04 Canadian dollar implies an upside potential of about 21% to current levels. Shares have jumped by about 70% over 1 year. If you enjoyed this video, leave a comment below and please hit the like or share button